Hi guys, welcome to my YouTube channel. In this video, today we will talk about Central Bank Digital Currency, CBDC. What is a Central Bank Digital Currency, CBDC? Central Bank Digital Currencies, CBDCs, are a form of digital currency issued by a country's central bank. They are similar to cryptocurrencies, except that their value is fixed by the central bank and equivalent to the country's fiat currency. Many countries are developing CBDCs, and some have even implemented them. Because so many countries are researching ways to transition to digital currencies, it's important to understand what they are and what they mean for society. Understanding Central Bank Digital Currencies, CBDCs. Fiat money is a government-issued currency that has no backing from a physical commodity like gold or silver. It is considered a form of legal tender that can be used to exchange goods and services. Traditionally, fiat money came as banknotes and coins, but technology has allowed governments and financial institutions to supplement physical fiat money with a credit-based model that records balances and transactions digitally. Physical currency is still widely exchanged and accepted. However, some developed countries have experienced a drop in its use, and that trend accelerated during the pandemic. PricewaterhouseCoopers. There are pros and cons to a cashless world. Here are 3 steps to make it work. Goals of CBDCs. In the US and many other countries, many individuals don't have access to financial services. In the US alone, 5% of adults didn't have a bank account in 2020. An additional 13% of US adults who had bank accounts instead used costly alternative services like money orders, payday loans, and check cashing services. Board of Governors of the Federal Reserve System. Report on the economic well-being of US households in 2023. The main goal of CBDCs is to provide businesses and consumers with privacy, transferability, convenience, accessibility, and financial security. CBDCs could also decrease the cost of maintenance that a complex financial system requires, reduce cross-border transaction costs, and provide those who currently use alternative money transfer methods with lower cost options. CBDCs would also reduce the risks associated with using digital currencies or cryptocurrencies in their current form. Cryptocurrencies are highly volatile, with their value constantly fluctuating. This volatility could cause severe financial stress in many households and affect the overall stability of an economy. CBDCs, backed by a government and controlled by a central bank, would give households, consumers, and businesses a secure means of exchanging digital currency. Types of CBDCs. There are 2 types of CBDCs, wholesale and retail. Financial institutions are the primary users of wholesale CBDCs, whereas consumers and businesses use retail CBDCs. Wholesale CBDCs. Wholesale CBDCs are similar to holding reserves in a central bank. The central bank grants an institution an account to deposit funds or use to settle interbank transfers. Central banks can then use monetary policy tools such as reserve requirements or interest on reserve balances, to influence lending and set interest rates. Retail CBDCs. Retail CBDCs are government-backed digital currencies used by consumers and businesses. Retail CBDCs eliminate intermediary risk, the risk that private digital currency issuers might become bankrupt and lose customers' assets. Issues CBDCs address and create. The Federal Reserve has identified critical requirements a CBDC meets, as well as matters that need to be addressed before one can be designed and implemented. CBDCs versus cryptocurrencies. The cryptocurrency ecosystems provide a glimpse of an alternative currency system in which cumbersome regulations don't dictate the terms of each transaction. They are hard to duplicate or counterfeit and are secured by consensus mechanisms that prevent tampering. Additionally, cryptocurrencies are unregulated and decentralized. Their value is dictated by investor sentiments, usage, and user interest. They are volatile assets more suited for speculation. which makes them unlikely candidates for use in a financial system that requires stability. CBDCs mirror the value of fiat currency and are designed for stability and safety. Central Bank Digital Currencies at a glance. Central banks in many countries have pilot programs and research projects to determine the viability and usability of a CBDC in their economy. As of March 2023, there were 11 countries and territories with CBDCs. They are the Bahamas, Antigua and Barbuda, St. Kitts and Nevis, Montserrat, Dominica, St. Lucia, St. Vincent, and the Grenadines, Grenada, and Nigeria. 18 countries now have a pilot program, including 7 of the G20 economies, and 32 countries have a program in development. According to the Federal Reserve, the U.S. is one of those countries that is exploring whether a CBDC could improve on an already safe and efficient U.S. domestic payments system. Is CBDC a cryptocurrency? Though the idea for central bank digital currencies stems from cryptocurrencies and blockchain technology, CBDCs aren't cryptocurrencies. A central bank controls a CBDC, whereas cryptocurrencies are almost always decentralized, meaning they can't be regulated by a single authority, such as a bank. Does the U.S. have a CBDC? There is no U.S. CBDC. The Federal Reserve and its branches are researching CBDCs and ways to implement them in the U.S. financial system. President Joe Biden has ordered the development of a national strategy on digital currencies. Is a CBDC based on a blockchain? A CBDC can be based on a blockchain, but it doesn't need to be. The Federal Reserve Bank of Boston and the Massachusetts Institute of Technology, MIT's digital currency initiative found in their research that distributed ledgers could hinder the efficiency and scalability of a CBDC. Many countries are developing central bank digital currencies, CBDCs, and 11 already have implemented them. A CBDC's main goal is to provide businesses and consumers with privacy, transferability, convenience, accessibility, and financial security. Many individuals throughout the world have no access to bank accounts, so a CBDC would give them a way to be paid, hold their money, and pay bills. CBDCs could also decrease the maintenance a complex financial system requires, reduce cross-border transaction costs, and give people who use alternative money transfer methods lower cost options. What do you think of our video? Let me know in the comments section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.